It's the year 2025. Airbus has only grown stronger, dominating the aviation market. For airlines seeking fuel-efficient, long-haul aircraft, the options are becoming more limited than ever. With Boeing still battling serious issues with its reputation and reliability, many buyers are finding themselves with fewer choices. The once-balanced competition now leans heavily in favor of Airbus. But that dominance might not last forever. Across the industry, new aerospace companies are emerging, bringing with them prototypes of aircraft that promise to be cheaper, more fuel-efficient, and better suited for the future of aviation. Among these rising contenders, one company stands above the rest. It's none other than COMAC, China's state-backed aerospace manufacturer. They've already begun to disrupt the market with their new C919, a short to medium-range aircraft now in production. The C919 is emerging as a serious competitor to both Boeing's 737 and Airbus's A320 series. In a recent interview, Ryanair's CEO made headlines by stating that the airline would consider buying the COMAC C919 if the price comes in 10 to 20% lower than Airbus's offerings. This statement is especially significant. Ryanair has long been a loyal Boeing customer, but now it's showing clear signs of exploring alternative options in the face of rising costs and shifting market dynamics. Across the industry, more and more aviation buyers are beginning to question the dominance of Boeing and Airbus. Rising costs, delivery delays, and geopolitical tensions are pushing airlines to look beyond the traditional duopoly. So, why has COMAC suddenly come into the spotlight? Firstly, after years of development, COMAC's C919 has officially entered commercial service in China, and it's already flying real passengers. This marks a major milestone, proving the aircraft is no longer just a concept or a prototype. Second, geopolitical tensions and rising trade barriers, especially between the US, European Union, and China, are forcing airlines to rethink their long-term strategies. With potential tariffs on Boeing aircraft and pressure on Airbus production lines, airlines are looking for reliable, cost-effective alternatives. Third, China being the second most populated country, its aviation market is booming, demanding for a cheaper alternative of travel. It's projected to become the world's largest market for aviation in the coming years, and COMAC is positioned to dominate that domestic demand. With over 1,000 orders, mostly from Chinese carriers, COMAC now has the scale and momentum to expand globally. While COMAC's C919 is shaking up the narrow-body market, China isn't stopping there. Its next big project is the C929, a wide-body aircraft designed to compete directly with Boeing and Airbus in the long-haul segment. So how does the COMAC's 929 compare to Boeing's 787 Dreamliner and the Airbus A350? Let's break it down. C929 is expected to seat 280 to 320 passengers with a range of around 12,000 to 14,000 kilometers. That puts it right in the same class as its competitors. Boeing's 787s, which offers seats between 296 to 330 passengers, depending on the variant, with a max range of 13,530 kilometers. On the other side, Airbus A350s, being in the same segment, offers around 300 to 410 passenger seats, with a max range of up to 16,300 kilometers for the ultra-long-range variant. So what makes COMAC different? Well, it's more than just geography. First, COMAC isn't a regular company. It's a state-owned enterprise, fully backed by the Chinese government. That means it's not just chasing profit, it's pursuing a national goal to make China self-reliant in aviation and break the Western monopoly on aircraft manufacturing. While Boeing and Airbus answer to shareholders and stock prices, COMAC answers to the state, and that gives it the freedom to play the long game, even if it means losing money at first. Second, there's the price factor. COMAC is building aircraft like the C919 to be 10 to 20% cheaper than similar models from Boeing and Airbus. In an industry where every dollar counts, that's a huge advantage, especially for cost-conscious airlines. Third, COMAC's strategy is completely different. While Boeing and Airbus aim for the global market, COMAC is starting at home, tapping into China's massive domestic aviation boom, which is on track to become the largest in the world. With hundreds of guaranteed orders from Chinese airlines, COMAC doesn't need global buyers, at least not right away. But there are challenges too. Unlike Boeing and Airbus, which have long established global supply chains and international certifications, COMAC still relies on Western-made components, especially for engines and avionics. And without FAA or EASA certifications, COMAC jets can't yet fly commercially in most international markets. But despite these hurdles, COMAC's progress stands in sharp contrast to China's first jetliner project, the Shanghai Y-10s. Built in the 1970s and modeled after the Boeing 707, the Y-10 was already outdated by the time it flew. It was inefficient, lacked international certification, and failed to attract airline interest. The project was quietly canceled in 1984. Today, COMAC is taking a far more strategic approach. As a state-owned enterprise, it benefits from strong government support, international collaboration, and decades of lessons learned. While challenges remain, COMAC's aircraft are actually entering service, marking real progress and laying the groundwork for China's long-term ambitions in global aviation. COMAC is a state-owned aviation manufacturer with unique advantages compared to Boeing and Airbus. Unlike its Western rivals, COMAC benefits from massive direct government funding and policy support, giving it financial stability and long-term backing that private companies can't match. It also has guaranteed customers in China's three largest state-owned airlines, China Eastern, Air China, and China Southern, which together control nearly half of the domestic market and have collectively ordered hundreds of C919 jets. This captive domestic demand allows COMAC to scale production steadily and gain market share even while facing challenges. Speaking of challenges, COMAC's reliance on Western components, especially engines and avionics, exposes it to geopolitical risks. Recent trade tensions have caused temporary pauses in engine shipments, and ongoing tariff uncertainties may delay aircraft deliveries worldwide. Meanwhile, China has imposed steep tariffs on U.S. aircraft imports, encouraging Chinese airlines to turn to domestic alternatives like COMAC. To mitigate these risks, COMAC is working to indigenize key systems, developing domestic engines and avionics through national champions, while carefully managing certification and production schedules to maintain momentum. China's commercial aviation market is the fastest growing in the world and is expected to need over 6,000 new single-aisle aircraft by 2040, accounting for about 20% of global demand. COMAC plans to ramp up C919 production to around 150 units per year by 2029, aiming for a significant share of both the domestic and global single-aisle market. Currently, the C919 has over 1,000 orders, primarily from domestic state-owned airlines, including around 100 each from China Eastern, Air China, and China Southern. Other Chinese carriers like Hainan Airlines and Tibet Airlines also have orders, and international interest is growing. Also, the Brunei's Gallop Air has placed orders and could be the first non-Asian operator. Even Ryanair's CEO has expressed conditional interest if pricing is competitive. Beyond the C919, COMAC is developing the C929 wide-body aircraft designed to compete with Boeing's 787 and Airbus's A350 families, with Air China as the launch customer. Though still years from its first flight, the C929 could expand COMAC's reach into long-haul markets. In short, while COMAC isn't the first state-owned commercial aircraft maker in the world, it is a modern, government-backed challenger aiming to reshape the aviation industry. Its funding and domestic market support help it overcome trade and supply chain challenges. With China's booming aviation market and growing international interest, COMAC is positioned to steadily break the Boeing-Airbus duopoly, starting with its bet to compete head-to-head with the Airbus A350. If you enjoyed this deep dive into the shifting landscape of global aviation, make sure to like this video and subscribe to our channel. It helps us bring you more in-depth aviation stories just like this, and together, we can make the aviation community even stronger. Follow us on Instagram at @aviatorsbird. Thanks for watching, and as always, we'll see you on the next flight.